Okay, let's touch base with the management of Bosch and get in a quick perspective on how things have shaped up this earnings. Soumitra Bhattacharya, who's president of Bosch Group in India, joins in with his opinion. Great to have you on the show. You know, margins have come in higher than expected, but there's still been a significant compression. What are the reasons for the same, and what's the outlook ahead in terms of margin performance?
I think when you look at the fiscal year 17-18, we have to understand that there were some items which are not like to like when you compare with 16-17. So first, I'd like to clarify that. The first item, which is an exceptional item, is the aspect of gratuity. In India, this limit has been increased from 10 lakhs to 20 lakhs, and the impact for Bosch Limited for the past period is approximately 100 crores. So that has a direct hit on the bottom line. So when you take out the exceptional item, the profit before tax for the full year at 18.3% versus the previous year, which is around 20%, is more or less, a similar set of numbers. Having said that, I did mention that we've improved on our personal cost, we've improved on other expenses while having a higher element on the material cost. And that is due to a product mix change. BS3 to BS4 demands higher, material cost product mix, number one. Number two, some amount of trading, because whenever you introduce new products, you start with trading and then slowly go into localization.
When the revenue mix, domestic versus international mobility solutions, do you believe the high run rate seen in auto sector is likely to continue?
It's a very good question. All of us in the automotive area, especially auto component companies, and 85% of our turnover comes from the mobility area. So we carefully look at all sectors because Bosch is in pass cars, heavy commercial vehicles, light commercial vehicles, tractors, three-wheelers, including two-wheelers. So we've seen that in each of these areas, we've had peaks in 2017-18. Now, how does it look for 18-19? 18-19, the month of April started pretty strong, and the Met Office has given a reasonably good forecast saying there could be a normal monsoon. So if you have a normal monsoon, if there is a pull from the consumer, which there seems to be, and if inventory is not piling up, then overall I can say the way things are going, it seems to be heading towards a positive year.
So talk to us about the readiness of BS6 and the underlying opportunity you see there.
So first of all, I think the government of India, when it announced the BS3 to BS4 transition in 1/4/2017, many people didn't believe that it will be a digital transformation. It did happen. So I think the industry first has to take cognizance of the fact that the 1/4/2020 transition, which will take place from BS4 to BS6, is going to happen. And we are working with all our clients, and BS6 has a very big element which is called the exhaust gas treatment area. And so we are talking to all our clients because we are providing engineering solutions for them to meet the BS6 challenge and have SOP with effect from April 2020, and where fuel change and fuel quality is also very important. So we believe Bosch is one of the few companies which can give an end-to-end full solution for our customers. Second, we are working very closely because the engineering effort required in BS3 to BS4, if you take it as X, you need 4X for BS4 to BS6. And we've put our engineers in place, we've sent them to Germany, we've trained them here, we have them on our customer sites. So I feel pretty positive. Now it's for the industry to mutually also deliver what the government has asked us to do, and time is not far away. April 2020 is tomorrow, not even the after tomorrow.
So walk us through about the utilization levels you are working with.
The Adugudi facility, which is 65 years young in the heart of Bangalore, is undergoing an amazing transformation. Today we are making this one of the smartest campuses, not just for existing products and solutions, but also for the future, which means including connectivity, IoT, and other areas which I mentioned. So CapEx, last year we spent about 460 crores. In the years to come, let's say 18-19 or 19-20, we will spend anywhere between 450 crores up to 650 crores because we have lined up a lot of projects both for Adugudi but also for our brand new plant Biddi, where we are just closing in on our phase 2, and by next year 2019 the Adugudi campus will be a plant free campus because we are shifting this our first plant in Bangalore into Biddi. So we are putting money for future technologies well on time, including building competencies, MAE, which means machinery, buildings and related infrastructure to meet India's growing requirements, including new requirements.
All right. Thanks very much, sir, for joining us and giving us those details on your earnings.